Good morning and welcome to the Islamic Finance Weekly, where we discuss and capture the activities in the non-interest finance market. Despite its remarkable growth as an industry in Nigeria and Africa, the non-interest finance industry still needs a robust legal framework that strengthens the activities of the entire ecosystem. At the moment, key regulators like the Central Bank of Nigeria and the National Pension Commission have rolled out regulatory provisions that cater for the needs of the fledgling industry. This is why issues of standardization and improved compliance with Sharia provisions have become necessary for non-interest financial institutions. In this episode of the Islamic Finance Weekly, the focus of our conversation this morning will be on legal framework and Sharia governance for non-interest financial institutions in Nigeria. To shed more light on this is my guest, Dr. Abubakar, lead consultant on Islamic finance at Anuti Ethical Consulting Limited. Good morning, Dr. Adam. It is nice to have you.
Thank you for having me.
Thank you for coming on the program.
Thank you very much.
His work and
Alhamdulillah.
It's good to have you again on
Thank
the
you.
Islamic Finance Weekly.
Thank you very much.
All right, so first, tell us what we should know about Sharia governance in the non-interest financial institutions in general.
Sharia governance is one of the distinctive features of corporate governance of Islamic finance. Beside the one-tier or two-tier corporate governance that we have in normal conventional finance, there is Sharia governance that is added to the corporate governance. And it is originated or rooted from the concept of Hisbah that is there in Islamic economics, which is all about encouraging what is right and monitoring and stopping what is wrong. So it is a way of checkmating the activities of the non-interest financial institutions to ensure compliance with the dictates of Islam. So the main work of the Sharia governance is to audit, review products, and also ensure compliance with the Islamic dictates.
To audit and review products.
Yeah,
and ensure
to
compliance.
audit the activities and transactions.
Exactly.
And then before the introduction of any product into the market or any service, it has to be reviewed by the concerned Sharia body that is going to certify such product to be Sharia compliant. And it is in so many tiers or in so many stages. There are some at the international level. You know that Islamic finance has gone international since 2000 to 1991 with the introduction or establishment of AOFI, Accounting and Auditing Organization for Islamic Financial Institutions, as one of the leading standard-setting organizations of Islamic finance. So they issued so many standards. We have Sharia standards, we have governance standards, we have ethics standards, and we have accounting standards. Beside the AOFI, there is also IFSB, Islamic Financial Service Board, which also issues Sharia standards and also issues technical notes and other guiding principles, guiding notes for effective Sharia governance of Islamic financial institutions around the world. Besides this, there are other supporting institutions that also support the Sharia governance. We have International Islamic Liquidity Management Agency. We have International Islamic Rating Agency. All these are supporting institutions at international level that provide these services. When we come down to Nigeria, for example, there is what we call centralized Sharia governance system, which is usually at the regulatory level. For example, at the central bank, we have a Financial Regulations Advisory Council of Experts, which is FRES. And at the institutional level, we have what we call S. When you go to SEC, Securities and Exchange Commission, they have their own Financial Regulations Advisory Council of Experts. The same in the Takaful. There is a body responsible for that at the regulatory level.
Takaful, which is Islamic
Takaful, that is Islamic insurance. And even at the apart
from NICOM being the regulator for the insurance and Takaful, are there other Sharia governance
there is Sharia governance which is responsible at the center. There is what we call Financial Regulations Advisory Council of Experts by the NICOM, Nigerian Insurance Commission. Also, they have their own Sharia advisors, which is at the central
for the
level for the
operators.
Takaful operators,
Okay.
which is added to the existing corporate governance, which is provided by the Corporate Code of Corporate Governance in Nigeria of 2020. So this is the general system of the Sharia governance in Islamic financial institutions.
Non-interest finance already has its own framework for promoting good corporate governance practices, and you mentioned IOFI, which is the standard body for the Islamic financial system. So scholars in Islamic finance declare that Sharia governance is the most essential and unique portion of Islamic financial system, which is lacking in the conventional financial institution. What differentiates it from corporate governance?
As I earlier highlighted, it's also part of the corporate governance, but it is a supporting governance for compliance.
So are you saying Sharia governance is similar?
No, it's not similar.
To corporate governance?
It's an added compliance mechanism on the existing corporate governance, whether one-tier or two-tier corporate governance as it is operated in different countries. In Nigeria, usually it's two-tier corporate governance. We have the board of directors and we have the management or executive component of the corporate governance. But beside this, there is a body responsible for this within the institution and at the regulatory level. And the concern of this is to ensure total compliance of the Islamic laws and principles according to the standard that are set and according to resolutions as may be provided by the regulatory agencies as highlighted earlier.
Okay, so non-interest finance is also subject to the
Code of
Corporate Governance of 2018.
Yes. It's an addition to the corporate governance. Beside the corporate governance, you must have your MD, your executive directors, and everything is there. But there is additional body which is separate from this two-tier system, which is responsible for checkmating the Sharia compliance, auditing, vetting the products before they are introduced, and watching the enforcement of Sharia compliance to avoid arbitration or taking opportunity, because it is built on trust. Most of the depositors that will come to non-interest financial institutions, they will participate based on the assumption that this system is called non-interest or is called Islamic. So if there is nobody that will protect their interest, some people may take opportunity to just give names without actual practice, to say that this is a non-interest, and beneath, under the cover, they are practicing all the normal and conventional practices that are being practiced in the conventional financial institutions. So that's why there is need for this body, and it is key. And this is one of the most distinctive features in any financial institution that tagged or termed to be non-interest, as the case may be in Nigeria, or Islamic, as it is usually known to be.
Okay, so let's look at the history of non-interest banking or Islamic banking in Nigeria.
Yes.
The non-interest banking can be traced back to 1991 with the amendment of POFIA Act. Yeah. So how would you describe the legal framework of the non-interest finance sector in the last 2 decades?
Actually, as you've just highlighted, the history of non-interest finance in Nigeria could be traced back to 1991 with the introduction of BOFIT, Banks and Other Financial Institute Decree of 1991, which allows for the establishment of non-interest banking based on profit and loss sharing. Yes. Particularly section decree number 23 and 61 are very, very explicit about this. That's why somewhere around 2096, 97, there were an attempt by some banks, conventional banks, to open window. Yes. Habib Bank led some
it couldn't operate because of the regulation
But actually, Habib Bank couldn't be successful because there were no regulatory framework at that time for the non-interest financial services in the country. And it is natural that when you are a regulator, has no regulations in place to regulate you, there won't be any regulation. Automatically, it's a failed attempt on arrival. So that's why around 2003, Nigeria joined Islamic Development Bank as a chartered member. Subsequently, 2009, joined Islamic Financial Services Board as also a member. this gave birth to so many concerns about the introduction of non-interest finance. And this is where the regulator now took it upon themselves to introduce the guidelines, which was released in 2009. But due to some bureaucratic processions that couldn't effect it until 2010 or 11, that the guidelines was released and was approved. But it was initially released in 2009 during the then CBN Governor, Professor Chukwuemeka Soludo. So it was that guidelines that gave birth to beginning of Jaiz Bank. Even though Jaiz Bank was given approval in principle since 2004, but because there were no regulatory framework, they couldn't operate across the country. Yeah, because there were no regulatory framework at that time. So, immediately after that, prior to that 2010, the Securities and Exchange Commission released guidelines for the fund management, non-interest fund management in the country. And in 2013, they released guidelines for Sukuk issuance in the country. At the same 2013, NICOM, Nigerian Insurance Commission, released guidelines for Takaful. All these are the regulatory framework that have been established, and this is what supported the rapid development and growth in the last one decade of the Islamic finance. And more recently, the PENCOM, Nigerian Pension Commission, released guidelines for the non-interest pension, which is usually known as
Sharia
Fund 6, which is non-interest fund. All these guidelines, when you take them together, you see that in each and every guidelines that we mentioned, there is a Sharia governance framework within it. Take, for example, the CBN, it has FRES, and in the institutional banks, we have what we call S. When you take the Takaful, they have FRES and they have advisors, Sharia advisors in the individual Takaful companies. So also in the fund managers, you can't operate as a non-interest fund manager without having your Sharia board on ground. So also more recently, just last week, the PENCOM released guidelines for the Sharia governance for the pension industry. They introduced what they call Pension Industry Non-Interest Advisory Committee, PINAC. Okay. That PINAC is responsible for the Sharia compliance of the non-interest financial institutions as a non-interest financial institution in the pension industry. So you see all generally the regulatory framework, the Sharia governance in the Nigerian financial non-interest finance sector is really impressive, and that's why some researchers are saying that even Nigeria has a robust legal framework for Sharia governance in the country. Even though when you see that we started lately compared to other countries, but the level of growth is growing at the 2-digit. It's 2-digit. The level of growth is 2-digit. Some are rating it to be about 25 to 26%.
Even from the capital market,
the capital market in the banking. From 2019 to date, we have about 2 banks that emerged, and others are coming.
All these, even Sterling Bank recently,
the Sun Trust. You see, so the development in the sector
is growing
rapidly, and the secret behind this is the strong regulatory framework. Beside this, even the recent amendment of the BOFI, Banks and Other Financial Institute Act, as amended 2020, it made so many provisions for non-interest finance.
But you know that in all this rapid growth that we've been seeing, but the Islamic financial institutions still needs to simplify non-interest finance product for others to be aware. For education about non-interest products is vital for people to know more.
This is one of the lacking areas. There is a shortage of awareness, creation, sensitization. Many people don't know about the non-interest financial services, and there is also misconception by even some, both Muslims and non-Muslims. Even among some scholars, there are some that are claiming that there is no difference between the conventional and non-interest finance. And this is as a result of misconception.
They still believe that Islamic banking, they are just under, trying to shade under conventional. That they operate the same way. So how do you see that? Is that true?
No, it's not true. This is a system that has been established, and it is guided by the rules and regulations. So for someone to say that there is no difference
between conventional and Islamic
finance and non-interest banking or Islamic finance, right? Rather, is definitely saying things out of ignorance, because even being an Islamic scholar will not qualify somebody to be an expert in Islamic finance or in Islamic banking or Islamic economics in general, because there are some basic requisites for someone to know in order to be an expert in this field. That's why the difference is enormous. Right from the governance, as we are just saying, there is corporate governance. Beside the corporate governance, there is Sharia governance, which is added to it. And even the contracts that are being executed in Islamic finance, usually in the conventional finance, is based on interest. The relationship between the two parties is between the lender and the debtor, while the relationship between the customer in Islamic finance is either seller and the buyer, or lessor and the lessee, or as the time may be, based on the different contracts we have, be it ijara, salam, murabaha, mutaraba, musharaka, or they can be partners. So there are so many differences that exist between the conventional and non-interest
Islamic finance is based on real sector, the fund real sector.
And there is no speculation,
there
and
is
it
no
has to
uncertainty
with the real economic activities. These are some of the
Okay, so
issues.
this got me to my question. You talk about the regulators, how they are taking Sharia governance for the Islamic financial institution. Recently, the Central Bank of Nigeria in January 2022 released a compendium of resolution financial regulation advisory council experts, that is the phrase. So how will this deepening the non-interest finance institution in the country?
Actually, as we have highlighted, that one of the functions of the Sharia governance is to make sure that even at the regulatory level, they can checkmate the level of compliance, because there is what we call institutional and centralized Sharia governance. At the level of central bank, there is centralized. This is the system that Nigeria adopts, and we usually copied it from Malaysia. The centralized Sharia body concerned for Sharia compliance in the non-interest financial institutions is Financial Regulations Advisory Council of Experts. While at the institutional level, in each and every non-interest financial institute, there must be a Sharia body. Usually we call it, as in Nigeria, Advisory Council Committee of Experts, and they are responsible for issuing fatwa and reviewing this. So at the level of the regulator, the central bank has its own phrase, and this phrase usually issues fatwas, and they are called usually resolutions. So these resolutions are the ones that are made in the form of compendium, and they were released. About 42 fatwas or resolutions that were made by the Financial Regulations Advisory Council of Experts were being compiled in this compendium. This will definitely deepen the regulatory framework of the non-interest financial sector. One, because they provide justification. They provide the reason for whatever resolution they make according to the Sharia point of view. Two, it will also assist other institutional non-interest financial Sharia bodies, that is the S, to take their proceedings, or to take these resolutions and affect them in their day-to-day affairs while watching or enforcing compliance in the non-interest financial institutions. So also, it will assist the internal Sharia auditing system of non-interest financial institutions.
So in a
to
nutshell,
have a reference.
In a nutshell, you're saying Sharia governance is vital for the activities of the non-interest financial institutions.
Indeed, it's vital, and you can't operate non-interest financial
without
institution under Islamic law without Sharia governance structure on ground.
Okay, so we'll go on a short break, and when we return, we'll continue this conversation.
Islamic finance has been misunderstood by many to be a religious product aimed at only Muslims. But that is not the case. Since the 2008 global financial crisis, Islamic finance has become an attractive segment of the financial market, promoting sustainable development and economic empowerment. Join me every Friday on the Islamic Finance Weekly at 11 a.m. West African time as we discuss Connect the Globe on Islamic finance and its benefits. It features experts, scholars, analysts, policymakers and regulators who provide insight on the capital market, banking, personal finance, Islamic insurance, financial literacy, waqf, halal, and all other aspects of finance and the economy. You don't want to miss it.
Welcome back. If you are just joining or watching the Islamic Finance Week, we'll be talking about Sharia governance in the Islamic financial institutions in Nigeria. I still have with me my guest, Dr. Adam Abubakar. Thank you very much. So, we'll be talking about how important Sharia governance is in the operation of the non-interest financial institutions in Nigeria. So, are there other issues that need to be reviewed or amended as it has to do with Sharia governance?
Actually, as I just highlighted, the recent amendment of the
what are the issues that need to be addressed?
The recent amendment of BOFIA, Banks and Other Financial Institute Act, has taken care of some amendments and recognized some components that has to do with the Sharia governance, particularly the S and phrase were even captured in the recent amended BOFIA. But even though this added value to the legal framework of the non-interest financial system, but then more needs to be done in this area.
Okay.
As you know that the Islamic finance in Nigeria is just growing. We are hoping that one day we'll reach the level that there will be an act, a special act for non-interest finance in the country, as we have in so many countries. In Malaysia, since 1993, they have Islamic Finance Act, and they have Takaful Act. So our dream is that one day we have a full-fledged
regulatory. This is where we need the regulator support for this.
We need to have an act that will elaborately mention everything related to Islamic finance.
Thank you, Dr. Adam. As we wrap up this conversation, so my last question to you is that what additional potentials does the Sharia governance have in developing non-interest finance sector in the economy?
Actually, what I will add on this is that there is need to address some of the challenges facing Sharia governance in the country. The major issue is lack of Sharia experts who are grounded both in the financial operations, modern financial operations, and the Sharia principles or Sharia rulings. So this is one of the major challenges, and the few that we have, they are usually the prominent scholars that are known. So there is need for mentorship, that younger scholars should be carried along so that they will be mentored by the senior ones, so that we have a clear bright future future that the future of non-interest finance is guaranteed, and there are some young generation that are knowledgeable about this system who will take it to its dreamed land. Beside this, also one of the challenges is the issue of lack of awareness about the entire system, the entire non-interest ecosystem by the public, as well as the even some of the scholars in the country. So there is need for massive campaign and sensitization for all components of non-interest finance in the country, the banking sector, the Islamic insurance, the Islamic capital market, the pension, and even the one that is not the Islamic social finance, the zakat, the sadaqah, the waqf, and as well as the halal industry, which is one which is very important component of non-interest finance or Islamic finance, but very small efforts is being put there, and it is a very important sector that need to be developed. So this has to be carried out by the operators, that is the banks, the insurance company, the pension fund administrators, the fund managers. So also the regulators, the CBN, the SEC,
the SEC,
yeah.
the NICOM,
all
PENCOM,
these supposed to,
yeah.
they're supposed to, as part of their corporate social responsibility, they're supposed to sponsor sensitization so that people will get aware about this system. Then the scholars, those that are, the very few that are knowledgeable about the system, supposed to voluntarily carry out massive sensitization through different means, particularly through the social media, the print media, and the other media that they can extend their message.
Definitely,
so this is my take.
Definitely. Awareness, sensitization,
Yeah.
education, all these are vital for the
Yeah.
growth of non-interest finance in Nigeria.
Exactly.
And we need, this support needs to come from individuals,
yeah.
Islamic financial institutions,
yeah.
the regulators, and
the
every
operators,
other persons that
Yeah.
need to be involved.
Yeah.
Definitely. Thank you very much, Dr.
Thank you
Adam
very much.
Abubakar, for sharing more light
I'm once again
on
grateful for
Sharia
having me.
governance
Thank you very
in the
much.
Islamic financial institutions
You're
in Nigeria.
welcome. You're
We appreciate your intervention.
Thank you very much. I'm welcome.
Yes. It is expected that there will be periodic interactions between key regulators like the Securities and Exchange Commission, Central Bank of Nigeria, National Pension Commission, PENCOM, National Insurance Commission, NICOM, Islamic Finance Standards Board, and non-interest finance institutions to explore how business and capital market legislations can promote the development and growth of the Islamic finance market in Nigeria. The most conscious effort by fiscal and monetary policy authorities in Nigeria to encourage the activities of the non-interest finance market, which can support economic growth and financial inclusion in the country. And that will be all for this edition. Thank you for watching and following the Islamic Finance Weekly. See you next week Friday for another episode.